Hello, everybody. Welcome to Shoulder Tap today. I'm Jack, joined by Ben, which is always a special treat. Ben, what's happening in Dallas?
I'm doing well, Jack. I've had better days. I always hate coming off of a Mavs loss, especially in the playoffs, especially in the finals, and we got our butt kicked last night. So I told my buddy I need that little tool they have in Men in Black that just flashes your memory. We just do that to the whole team and keep moving. We got stomped last night by the Celtics, but other than that, doing pretty well. Happy it's Friday and looking forward to a sunny weekend for once here in Dallas.
No, that's great. I recommend. I've just been hitting myself in the head with a brick for 9 years for all Chicago sports. I think the Blackhawks won in 2015. That was the last time. I'm not a Cubs fan, so that's the last time anything good happened there. So, Bears are going to be good, though. I hope.
Yeah.
So today, Ben, I thought we have you can do some shout outs. We have a couple of cards, and then we can take any questions people have from in there and kind of have a nice casual Friday shoulder tapping.
Yeah, I'm looking forward to it, and lots of interesting activity, lots of cool stuff to talk about. Overall, it's been a mixed bag on the live boards today. We've seen plenty of green, plenty of red as well. Some traders are up big, some didn't quite know when to walk away. So we'll
Hmm.
walk through some shout outs and then talk about some things we want to improve on. To start, Nick for a tick up 2,500 in his live account today. He's just slowly, steadily been building that live account balance, that P&L up today, which is great to see. Francisco up a cool 5 grand in live. Raul at 4,100, and Eddie S also up 5,200. So love seeing that. Something that kind of caught me on the most recent update for these live P&Ls, and I was looking through it. I caught some of the TopstepTV broadcast this morning, a little bit of fast markets, but notice that there's some pretty highly correlated trading and trading into the red between our house account, Dakota's account, and MP's account. I know they were all on the same broadcast, but lots of trading in the same instrument, lots of direction, amplifying that leverage in a single direction. When you're correct, then it's great. When you're incorrect, then it's wrong. And that's part of the risk team's job, is to help mitigate losses and manage the company's downside, the prop firm's capital to the downside. So we took a beating, across 3 accounts with those losses. So that's something that I think the risk team is going to get together probably Monday morning and talk about. Maybe going forward we see something like that across multiple kind of bigger. Dakota obviously has a big account. He's managing the house account as well, and MP's got the green light to do what he wants in his personal account too. So we see correlation that way. Maybe that ends up getting hedged out, but we'll game plan a little bit about how we manage that downside so we don't take a big loss across 3 accounts in one product in one direction. So other than that, pretty good day, pretty good trading. A lot of people got caught up in that NFP number. I know that's something we'll talk about here with our
Hmm.
first trading card, but I think you and I have talked about that before, Jack. Trading into economic releases is generally a no-no. You learn one way or the other that's not a good idea. So yeah, we can highlight an example of that going into the first trading card if you're ready.
I am ready, and yeah, when I was trading too, a lot of us were basically doing the same strategies. So there's definitely, you know, a lot of people blowing out at the same time. It was unusual that just one person would blow out. It would usually be about 80% of the room. So, yeah, we got to do something about that. That's for sure.
Yeah, no doubt about it. But yeah, okay. Well, let's move into the first trading card, and I got called out. I think it was yesterday when Brett was on. I listened to some of his shoulder tap segment. I got accused of being a good cop too often, which I'll admit is true. I love highlighting our great traders, especially the people we're calling up to live accounts. But I do plenty of bad cop work in the background, and specifically on this first trading card, we got to talk about the consequences of trading size into economic releases. So if we can pull up our first trading card here for Wayne, we'll talk about what happened in his live account today.
Wayne, Wayne, Wayne.
Yeah, Wayne. So he's got the patented gravestone there. Wayne blew out his live account today. Ended up taking a significant loss below that max loss limit, and blowing well past the daily loss limit by trading into that NFP number. So Wayne actually had a bracketed stop market orders around the last price going into that economic release, meaning he was gonna he had a stop market. buy order and a stop market sell order above and below where the price was trading at just before that release. Got filled. And because of the volatility, and you could even look at, I would encourage our viewers to go back and study you could look at the 1 minute chart or even a shorter time frame in the NASDAQ. That's what Wayne was trading. In a 1 minute candlestick, we took out the previous day's high and previous day's low on that NFP print. So economic releases are a wild card. You never know what's going to happen. You never know what the number is going to be. I generally, especially for newer traders, but even really experienced traders, we consider it a gamble. You don't know what the liquidity situation is going to be like. You don't know what the actual implications of a positive or negative number are going to be for the markets. And without, a $200,000 trading rig and lightning fast internet and the Bloomberg terminal, unless you've invested $500,000 or $1 million in getting lightning fast executions, trying to be first to the market, so to speak, you're not going to win that foot race either. So it really is reckless trading, and it's a gamble trying to put on any kind of size, whether that's a 1 lot or a 15 lot. And Wayne had a 15 lot that he got market ordered into in a time where there's very little liquidity, and instantly got vacuumed out the other side, stopped out for a $26,000 loss for a single trade. 26 grand lost on this trade in the NASDAQ going into that NFP number. So just a brutal loss, really, in a live account, no matter what size account, happening within a matter of seconds. So that more than took out the daily loss limit in the 150K account. The daily loss limit is 3 grand. So, this is a cautionary tale for what can happen when you put on size into economic releases. It was pretty tough to see when we sat down at the desk this morning. Jack, before I go any further, do you have any thoughts on that, taking that type of a loss? Have you experienced anything like that yourself in your own trading? I think that's almost a rite of passage. Pretty much everyone that trades long enough is going to get caught in a number at some point.
Yes, but it was usually a little bit more strategic than this. I just want to, just so I'm clear on this, the sequence of events, this was a position that he had off the market through the number or held through the number. What happened here again?
So Brett and I were discussing it this morning. He had stops on, stop markets above and below that price. Trying to capture that straddling is what they call it, trying to capture quick move. And yeah, as you can see from Jack's face, that's a seasoned trader reacting to that type of behavior. I mean, even if it had been held into that number, right? If you're long or short 15 lots into a number like that, it could be anything. It could be a nothing burger. The projection is exactly the print that we got on the economic number, and there's a 5 point fluctuation in the Nasdaq, or what we got today. Just the total absence of liquidity for a few seconds where you cannot get filled. And just so everyone understands what that means from a liquidity standpoint, liquidity is just how easily you can get into or out of your position, and the position you want in a market without affecting the price. So Jack, I know you've traded financial products, specifically bonds, in the past. Bonds are notorious for being very liquid markets. There might be 1,000 lots on the bid and the ask, and that spread is one tick wide. That's
Yeah.
very, while it may take you a little bit to get filled, that's a very dense, very liquid market. Versus if you're trading something, like you're trading platinum, at 1 a.m. Central Time, and you want to buy 15 at the market, you might get 3 or 4 or 5 points of ticks of slippage because there aren't enough resting orders to fill that market order saying, hey, I want to get in right now, and I don't care about the price. So something you need to study and understand if you don't already is what liquidity is.
Guys, even if you want to get, I have so many thoughts about this. For starts, I hope you all realize from this, do not do this, especially, stop loss orders with a 15 lot through unemployment. Gun to my head, I would rather you just slap the 15 lot before and flip a coin. You're going to get toasted on that. Now, the closest, you know, the closest I came to not doing something like that during a number is the CME offers, they probably still do these things called implied spreads for futures, right? Where you're guaranteed a spread, you pay a little premium on it. And we would stack those up during unemployment. Here's the major difference. This worked very well for a while, and they don't move as fast as you said. Like if it went through you, you could puke it relatively easily. Not so in, what do you do this in? The NQ?
That's
I mean,
correct. Yeah.
look at the NQ ladder. Next time it's 30 seconds to unemployment and figure out how many points you'd have to go to get 15. And that's just you getting in. To put those on both sides, that's, I don't want to beat up on people, but that's a ludicrous thing to do. So I don't want to
Yeah.
come down too hard because this individual paid dearly for it. And
Sure.
that's not good. But if this can be a cautionary tale to anyone out there, never do something like that through a number. Just don't even think about it. Just forget you ever knew about this, accept that it was bad, and we won't talk about it again.
Yeah, and we could sit here for 2 hours and talk about all of the different takeaways, cite different examples historically. I've gone through it personally, Jack. I know you have, and it's something you have to learn from. Wayne was called up to a live account for a reason. He's traded profitably with us, and more than anything, I hope that he treats this as a lesson learned, and just doesn't do it again in the future. As a risk team, it's something that obviously we have to make note of and consider going forward for his account and him as a trader at Topstep. It is a black mark, if you want to call it that, but ultimately, you got to learn from it and come and take that away. One other big takeaway is the value of what Topstep offers to our traders. This opportunity to not actually lose $26,000 of your own money in a live account to learn that lesson. That is a big loss. I've taken a $20,000 loss of my own personal money in an account on a trade I, had strong conviction in, and was sitting there shocked and in disbelief because it went against me. So you've got to learn from it, and TopStep offers you a great opportunity to learn without risking your own capital. With risking very little capital, obviously, there's still the investment of the trading combine fees and activation fee to get into that XFA and data fees. But realistically, that's peanuts considering a $26,000 loss was not actually taken by yourself. So good thing to remember there. And
Out
go ahead,
If you can
Jack.
find this out for me, this is out of entirely morbid curiosity. How far were these two 15 lot stop orders away from where the market was trading just before the number?
I
Because
don't have
because
that on hand. I could probably
the
dig that up. I'm not
the
sure.
closer they are, we got to dig this up because the closer they are, the more I'm going to lose my mind.
Yeah. I mean, heck, even that's like trying to ride a bull in and of itself. If you're trying to get 5 points, a 5 point width straddle on the NQ, just pre-release fluctuations, that's going to be difficult to pin down. That's a wild Bronco to try and ride on any day. And like you're saying, Jack, if you want an idea of the liquidity situation, just watch the Nasdaq on a regular open, right at the 8:30 Central Open. You're going to see a kind of a vacuum there, and it's going to be difficult to get filled where you want to get filled in the live market. So it's important to remember the leverage that's associated with these futures contracts. And thinking about risk first rather than profits. It's easy to get these big eyes. Oh my gosh, NFP, we've been waiting all week for this number. There's going to be a big move. I'm going to catch the right side of it. You could catch the right side of it, but over time, it's going to eat you alive. It's not something you can really plan for without extreme sophistication and a lot of infrastructure behind you beyond just what the retail trader is capable of, right? You have to be at a really, really serious firm, hedge fund, and have all of these other technologies and strategies kind of behind you, similar to what you described earlier, Jack, to play into something like an NFP release and have any level of profitability. So just a cautionary tale there, and Wayne was doing okay in the account. He was realistically treading water prior to 10 trading days prior to today's catastrophe. So we don't want gamblers in our program, and we consider this gambling, and we will make note of it going forward. But Wayne, shake it off. Again, thankfully, it wasn't your own funds that you lost, and take some time, take the weekend, reset, and when you're ready, you can go back to trading and start building back up. So that's what we got for Wayne. Anything else you want to add there, Jack, before we move on?
No, I think we've beat this into the ground.
Yeah,
It's
yeah,
the
I think
old
so.
Simpsons thing. Stop, stop. He's already dead. Let's see who's next.
All right, let's move on a positive note. I get to play good cop today too.
Nice.
Oliver, this one is a one you'll love, Jack. We called Oliver up to the live account yesterday, 100K XFA that he's been trading in, trading the Nasdaq and gold and silver as well. So trading those precious metals. We had a solid body of data. I know we could go back to that over and over again. Oliver's been trading 34 days in this account, so we've got a lot to look back on as far as trading performance. 53% winning days and 47% winning trades. Very, basically a coin flip as to whether or not he wins the trades or walks away profitable on the day. But what's really impressive is that risk reward paired with that win rate. So 2.8 to 1 risk reward, almost 3 to 1. That's amazing for a 50% win rate. Again, that's going to fluctuate probably between 40 and 60% over time. If you're really locked in, really consistent, you'll see fluctuations there over time. But regardless of even if it was at 40%, a 3 to 1 risk reward is going to be very profitable over the long term as long as you're managing that downside. And that's one of the positives that I had down for Oliver. He's a great loser, and I mean that in a very constructive way. So much about trading, just like we just talked about, thinking about your downside first, recognizing when a trade's not working for you, thinking about what you actually can lose on the trade before you think about what you can profit on the trade. So valuable. And Oliver does a great job of that. So we see from the trade reports that he also has an average losing day of less than half of the daily loss limit. Another very positive trading behavior we love to see. And then the upside is there, having an $1,800 average winning day. And this trader's best day was $5,500 in the account. Worst day being that daily loss limit. But again, the daily loss limit is so valuable because it backstops you. And as long as your best days are continually outperforming those worst days, you're going to be in a good spot as long as you're not, only winning 1 in 5 days. So really, really good stuff. He's taking 3 trades a day, decent size, averaging 8 contracts per trade, but letting the numbers work out for him. So getting on the right side of a trade and letting those winners work. So 20-minute average hold time on the winners and 4-minute average hold time on the losers. Cutting losers quick. Whether that's manually or keeping a tight stop, picking a good spot in the market and it gets hit quick, and then writing out the winning trades for profit. So as you might expect with these statistics, Oliver, after 34 days, had taken 2 payouts as well in this account, totaling $9,300. So almost 10 grand worth of payouts across 34 trading days. That's awesome. Couldn't be happier for Oliver being able to take money out of his trading account like that, out of that funded account. And what else can I say? Average losing day again, less than 50% of that daily loss limit. Just keep doing what's working. That's the number one thing. Far too often I see and hear directly from traders that they're going to, tweak their strategy or try something different or, have an added level of stress for one reason or another that they're moving to the live accounts. And there's no need for that, in my estimation. Stick with what got you there. And as you continue to scale that account up, as you continue to grow that account, Dakota is a fantastic example of that. We've worked with Dakota intimately over the last 3 or 4 months as he's grown that account balance, as he's talked about his strategies with Brett, with myself, with Mick about what he wants to change, how he wants to scale up his size. We can adjust those risk parameters and we can get you the leverage if you're trading well. Oliver's able to maintain this level of caliber of trading in the live account. That's our job. Our job is to put trading capital in the hands of our best traders. And within reason, we're going to put more capital in your hands and more risk in your hands as long as you're respecting it and trading it well. So really excited for Oliver. Feel good Friday moment for Oliver. And we can't wait to see him in a live account. Is there anything that stuck out to you, Jack, outside of that fantastic risk reward and win rate?
Yeah, because that's like this is our cleanest stat. I like looking at the average winning day versus average losing day, and that's a great one right there. Just a little bit over 2 to 1. That's something that seems really sustainable. I've never heard of Zealand, Michigan, but it looks nice. 34 days, that's a good sample size. Paying themselves. Yeah, I mean, this is looking like a really great card, so I think it's a great person to have in a live account.
Yeah, yeah, we all feel that way. Every once in a while, you come across a trade report that's a very easy call up, and this was one of them. So kudos to you, Oliver. Great trading, and we'll see you in the live markets here very soon next week. So that's all I had to cover today. If you want to do some Q&A, or we can go wherever you'd like, Jack.
Yeah, well, we can take a look in there. I think that the thing de jure, I'm still a little bit thrown by that first card. I'm going to think about that for a while. But I think that always in sim, I've yet to see a sim program, unless it was at one of those forex places, wink wink, if you know what I mean, that is giving you worse slippage than you could get in the live markets. Like I've seen before in futures where people trade through numbers with like spreads and stuff, and I've seen people get uh make or lose tens of thousands of dollars on just a mishedge, right? Where you get one side, don't get
Right.
the other because those things really move. And so we mentioned liquidity. I know all y'all trade the NASDAQ. I'm never going to convince you otherwise, but might be worth taking a look at the ES. It moves relatively the same, a little slower. Um, just because I feel more comfortable when I'm trading something that I know I can get out of quickly. Gives me heart palpitations looking at that NASDAQ ladder.
Yeah, that's a great recommendation, Jack. The S&P 500 is a fantastic futures product. It's very, it's one of the most liquid financial instruments you can trade. Period. There's millions of contracts traded, on the week, and it's a, like you said, a little more clean movement than the Nasdaq, which tends to whip around, and that's what I would recommend if someone were going to ask me what products, I want to trade. I want to trade futures contracts. What should I look at? I'd probably steer them to the ES first. I would not recommend the Nasdaq to a beginning trader. I know that, like you said, that's the most popular product, and I can understand, for certain reasons why that is. But the ES is great. There's lots of products. Heck, for gold, crude oil. Those are also very liquid products. You're going to see, depending on time of day and what news is around, you're going to see some clean movements there as well. So find what you like, explore. There's we've got, I think, 32 products, something to that effect, that we offer. Doesn't have to be the Nasdaq all day every day.
Well, yeah, and one last thing. I'm old enough to remember, Ben, at Topstep years ago. Like the reason why we have some of those rules or like are monitoring the trades under 20 seconds or like the number of trades was for years there were these folks that were going deep and heavy scalping the Nasdaq and essentially working strategies that only made money because they were sim. And it was always a funny conversation because you would talk to people, be like, "This it just isn't possible. Like, what are you doing?" It's like, "No, I'm making all this money." It's like, "Okay, you have this strategy to make money. Open a brokerage account and do that. Prove us wrong. Like, you're sitting on millions of dollars here. If you are the one person on earth that can take 15 lots of Nasdaq and beat them back and forth in the market, in the live market, and make money." So, uh, yeah, just be careful of that.
No
Real
doubt,
markets are
and
real
and
markets.
exactly, and thankfully, the SimFill logic for these brokerages has come a long way. It's a lot more symmetrical, and representative of what real happens in live markets. It's not exactly the same, of course, and there's still those minor incongruencies, but you see much more representative slippage in the sim markets than you did even 2 years ago. So kudos to our brokerage partners for continuing to refine that, making it as parallel as possible with the live markets. There's still going to be, like I said, those minor incongruencies, but yeah, it's live markets or live markets, and that edge is hard to come by, whether it's sim or live, and liquidity has to be a consideration, especially in those live markets. You got to understand that, and what you're getting yourself into. So just a tip heading into the weekend, and I hope everyone has a nice restful weekend and comes back ready, prepared for next week.
I am ready for it. I was off Wednesday, but I still feel like the weekend is a welcome thing. So everybody stick around. The Friday's not done yet. JD and Hogue are coming in next for group coaching. Then we got Robert, Andre A, not our Andre, and Marie for the strategy lab, and then Andre and Dolby taking us home for Power Hour. It's going to be a raucous good time, so stick around. Don't put stop loss orders through unemployment, please, if you take one thing away from this. But otherwise, have a good time. We'll see you right after this.